Okay, good day to everyone. This is a very interesting episode because it is the 50th video that I have created since I started to experiment in being a content creator. And today we're going to do a shallow dive into Mapletree Industrial Trust. All right, and the motivation is that if you've been following my shallow dives, I went into AIMS APAC REIT last week. So the shallow dive would be much better if we can look at a REIT that is very similar to the last one that has been posted. So it'll be interesting if you look at Mapletree Industrial REIT and AIMS REIT together, and you notice that the challenges and the REITs, in spite of both being industrial REITs, the 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 results of the analysis it's very different. Okay. So Mapletree Industrial Trust, right? You will see their industrial buildings everywhere. So they operate income-producing industrial properties, flattered factories, high-tech business parks, global data centers to generate rental income and long-term capital growth. And you find that 40% of the revenues now come from data centers in Singapore, the United States, and Japan. And do take note that North American data centers are now 34.7%. Of the rental payouts. All right, so we're talking about a third in denominated in US dollars. Okay, it is obviously a very large REIT because it is in the STI. Okay, and currently the price to book value is higher than 1, which means it is richly valued. All right, it's richly valued. The current gearing at 40% is not too bad. Okay, it'll be better if it goes below 40%, but it's not too bad. Okay, but the interesting thing is the interest coverage. It is 3.9. So when you compare it with AIMS APAC REIT, right, even though Mapletree Industrial Trust has a higher gearing, its interest coverage is much higher, so it is more secure. And the reason why is because for AIMS APAC REIT, they have a lot of perpetuities that's being released or issued, right? So Mapletree Industrial REIT, in that sense, comparing gearing for Mapletree and AIMS APAC is not a good method of comparing. An apples to apples comparison would be to use interest coverage ratio, right? So this is a very good way to learn a little bit about some of the issues you face with real estate investment trust today, because the managers have figured out that if I issue a perpetual bond, it doesn't count as debt in my balance sheet, it counts as equity, so I can keep my current gearing very low. Okay, so don't fall for this. We are retail investors. You know, well, most retail investors don't have a CFA. So it's good that, you know, when you listen to my content, right, I want to flag out the key issues, right, for real estate investment trust. So I have a position in this REIT, and I've been increasing my holdings lately, but mainly just to balance out and make sure that I have a very strong set of STI REITs like Fraser's Centrepoint Trust and MIT, so that the day will come when interest rates start to drop. The banks will not do so well, but at least, you know, my blue chip REITs would be able to hold the line. All right, so okay, let's look at the dividends. Dividends are not too bad, 6.35%. Okay, higher than 1 price to book value. So high dividend, high price to book. Obviously, I would prefer something with a high dividend and a low price to book. Okay, but you know, markets are very efficient. Okay, don't try to think that you're smarter than the markets. So the trading yield of about 6.6, forward yield of 6.3, not too bad, right? What I love is that it pays 4 times a year. So it pays in, I think, March, June, September, and December. Okay, so yeah, the 4 times a year is a very big deal for me. So actually, I do like to hunt for REITs that pay every quarter, right? Yeah. Okay, so for REITs, we use price to fund from operations to assess how cheap it is. Okay, artificial intelligence projects the PFFO to be about 16.48. All right, not too high, not too low. Okay, so this is a dividend yield play. Okay. The Mapletree family of REITs, despite its stellar performance many years ago, has been underperforming of late. And you find that the statistics for the REIT, it's quite obvious. You're only getting 2.55% compared to, well, it's better than the REIT ETF. Okay, your risk is obviously higher. Your maximum drawdown is obviously higher because you're holding on to one stock instead of an ETF. But we're not talking about a very fantastic kind of Sharpe ratio. Okay, and this is, to me, I think the beauty about investing in REITs today, right? One of the reasons why I'm putting more money into REITs, and I think a lot of retail investors might want to consider doing that, is because the REITs have not gone up, right? Compared to the banks, compared to the small cap, mid cap stocks like UMS and AEM, REITs have been laggards, right? Have been laggards, right? Whereas construction has gone up quite a bit. Okay, so I think the best time to nibble is when you see the numbers like this, right? Annual return 2.55%, whereas there's no sexiness in that, right? Do take note that the annual skew, which is one of the numbers I love, and generally people won't investigate this number. If it is a positive number, that means if it begins to melt up, right, and go up, right, the upswing is going to be quite intense, all right? So you don't know when the upswing is going to be, but it's something that you want to think about. Okay, so being a large REIT, there is a high correlation between Mapletree and REIT ETFs. Okay, so it's something that you might want to consider. Okay, how do we think about MIT? Right, the consensus view is positive from analysts. Okay, the target price is between 226 to 233, which means that there is some upside to go. All right, now analysts like Mapletree for its stability, positive rental reversion. Okay, and I think the key, emerging data center play. Okay, so if you're talking about betting on data centers, I would say that the REIT, the classic REIT that you want to bet on is Keppel Data Center REIT. Okay, but Keppel Data Center REIT, everybody loves it, so it barely gives a decent dividend, 3 to 4%, right? Mapletree Industrial Trust, about 40%, it's a 40% data center REIT, okay, but it gives you more than 6%, okay? Yeah, so this is like a hidden data center play, all right? The strength is that the REIT derives income from diversified sources, so you're still getting flatted factories, business parks, but now you're getting data centers, okay? Rental reversions are decent, okay? There is a weakness because your gearing is over 40%, and you want to watch the data center occupancy like a hawk, right? So when you read the news, right, you know, you should always pepper the CEO, you know, what about US data centers? You know, did you make a wrong move moving your money there, and what's going to happen to the occupancy for data centers, right? But generally speaking, data centers are quite sticky, but if you lose a client or the startup collapses, right, filling out the space, I suspect, is challenging. Okay. Okay, so the opportunities come from more AI adoption, okay, redevelopment potential of industrial buildings and divestments. Okay, so when it comes to AI adoption, right, be very careful because the question is whether the data centers are the kind of data centers that the AI companies want. All right, threats can come, lease expiry, tenant concentration of the US data center is a major concern. Okay, yeah, so I flagged out all the major issues for you. You should know how to do due diligence from this point onwards. All right, so imagine an industrial REIT that is slowly transforming into a data center REIT. Okay, and most of the issues are concentrated in the US. So you want to go through the tenants and assess how concentrated they are, right? The question is whether AI adoption can be answered if you do a more in-depth study of the data center, right? So AI with a lot of GPUs, these are AI servers might require a lot more power. So if you want to do due diligence, you want to focus on the technicalities of AI-friendly data centers versus the ordinary data centers that I used to look after 15 years ago with server racks and blades. All right, so I'm very obsolete. All right, so what does it take to put all these GPUs in a data center? Do a little bit of investigation into that. Okay, there's a lot of confidence about the industrial properties being run in Singapore. Okay, but there is some divestments in this space, so some capital is going to be recycled. Okay, but the REIT is one of the most stable ones in the STI. All right, and try to watch this video with the video on AIMS APAC REIT last week, so that creating these videos also make me smarter about the investments I have in my portfolio. As you go through this, you also become smarter, right? When you compare the different REITs against each other. All right, and that's all I have for you. right? You can buy me a coffee here. If you want to listen to what I say, go to Google ERM intro, take the first link, and come for my Dr. Wealth preview, and we'll chat for 1.5 hours. All right, thank you very much, and I'll see you in the next video.